how's it going, guys? Welcome back to mentfx, and in this video I wanted to look at the difference between what I believe to be the mass retail logic available to many traders out there compared to the smart money retail, if you want to call us retail, the smart money side of things and logic of looking at the market, and why some people get confused about making the switch, why some believe that smart money is nothing more than mass retail and shouldn't be making the switch, and to show you why making the switch, or at least attempting to implement the concepts covered in this channel, is more beneficial to you than you might believe. So I actually posted a picture of this to my Instagram, a very quick picture, and I'll show you guys really quick for those of you that don't want to stay long. The difference is ultimately this. This is the exact same chart in front of you. This right here would be an example of what mass retail logic could somehow look like. Now, this is only one example, right? A lot of you have to recognize that in this, there's also a lot of other things that might have even kept you out of this buy, such as this new channel that began the forum, the channel getting broken, the new areas of resistance and support that happened here, the areas of support down here, the areas of support inside of here that technically were taken out by this wick, the trend lines that were forming this way, the trend lines that were forming right here, the trend line that was forming inside of here that got liquidated, so on and so forth. The little shark finny boy pattern, whatever you call it. I call it a shark fin because I have no idea what retail calls it. I don't really care. Ascending triangle isosceles, you know, it doesn't matter. And maybe something inside here will show you a new area of resistance or nice little head and shoulders, right, that gets liquidated, all this stuff, right? The point is, this is only one take of what a retail also, we can get rid of this -1 just because, you know, maybe they would be selling there, maybe they wouldn't, maybe they'd take profit here. I don't know what they would do exactly, but based on my 10 years of pretty much learning from retail, a lot of what I got was understanding the areas in the market from this type of perspective. And of course, your trades don't have to be like this, but this is a very, very easy example of a area that was a resistance, a break into new higher structure, and a retest of that previous area of resistance, which has now become support, with your stop loss just below the low, expecting prices to then make their ascent up into here to at least a resistance, and maybe even higher if you're targeting some higher points in the market. So very quickly, the difference is this. This is how a retail trader may view a market from the standpoint of the things they've learned and the belief that price will just continue because it's bounced off areas historically, will continue to bounce from those areas without any regard, in a lot of cases, for why these areas are holding, for the liquidity that might be present at some of these areas, or for the inefficiencies at some of these areas as well. Taking the extra step to just ask yourself, in this specific case even, where's my last down move before the up move, such as this one right here. Understanding that within that area itself, there are orders that were put in on behalf of smart money or big hands that sold in to all these orders here, which sold in here to buy, sold again to mitigate that previous to buy, giving themselves, well, leaving behind a ton of unmitigated orders that they then took higher to run the liquidity above all the people that were selling here and here and here on behalf of this retail trend line, this retail channel that even got broken, whatever it is that you were looking at there, maybe the equal lows, I'm sorry, not the equal lows, sorry, all the equal highs and stuff like that. If you had bought these specific equal lows, in this case, it'd be fine, right? But the point is, I'm just trying to show you that there is disregard for areas as to why price may come to these zones. Additionally, there's disregard for the idea that prices need to be fulfilled at certain areas of imbalance. And what's even more interesting is that I have met a ton of mass retail traders that have noticed this and made it part of their retail strategy without understanding the reason behind it. And that's fantastic. If you can notice something like this or something like this and understand why these mitigations happen, then you're already on the path to understanding a lot more about this market. Now, again, from a quick study, you can see that, you know, you have disregard for some of these areas, and you're assuming, you're running under the assumption that areas in the past that have held will continue to hold, and even if it might have a bigger if it might have a bigger move through it, it's just part of holding that area or so, right? That's what it's usually known as. Like, for instance, if you had this support line drawn out here and this happened, this would still be support holding, and even here it holds, right? How are you going to be trading this? I'm not 100% sure. I don't know exactly how retail confirms, but from a standpoint of a lot of the retail knowledge I used to use, this would be an example of a trade you could take. And of course, you'd probably partial, not just close your position here, because you'd be looking to take it higher to give yourself more RR. But at the same time, you have to realize that as you're seeing the support and resistance, if you get rid of this, you're also seeing, right? You're also seeing this resistance. You're seeing this resistance. You're also seeing this resistance, right? And if you really think about it, at the time of this became an equal high that actually showed you a push down. And on a lower time frame, that push down was met with some kind of most likely channel that might have begun. Not 100% sure. Can't tell you exactly how retail trades, but what you need to realize is when retail or mass retail trades, not retail in terms of smart money. I know I'm fucking retail. Quit telling me. I'm fully aware I'm retail. But when mass retail trades from the standpoint of I've seen it happen before, so I'm going to expect it to happen again, or I just think this area is going to hold because it looks like it's going to hold, there is no attempt for you to go deeper and understand what's actually going on. Now, the cool thing is if we look at this mass retail knowledge, we notice that, technically, we'd also be in the bias for longs, right? Even under retail. And theoretically, this actually ran a shit ton, right? This ran up 1.4, 1 to 7, and whatever this high is. Let's just go to the entire high since Forex traders like to show that they made it to the real high, right? It ran a whole 1 to 10. That's fantastic. That's a really good trade. And that's true. That is a good trade. And this would have been a great trade if you had caught it on behalf of retail. And again, your stop loss worked and it all held, and that's fine. Now, on the other end, if you had been confirming this support area, right, and you didn't take the buy just off of the break and retest, right? So this is just an example of downtrend, switch in trend, retest of the previous resistance before the support, right, to continue higher. If you hadn't taken this low as a stop loss and instead decided, in this specific case right here, let's delete these two, and instead in this specific case decided to use a confirmation, you'd see this area begin to hold somewhat, then it comes up, right? So maybe you start buying here off of the break of structure, but then it fails. Okay, so it gets liquidated. Okay, -1 maybe. Okay, then it comes back down here, comes back up and breaks again. Maybe you get in again. Okay, as it comes down, it begins to form some kind of flag, breaks out of the flag, creates a channel, even breaks the channel for a second. So it gives you, and even down here, you can see wick, wick, wick. On a lower time frame, inside of here, there's actually a head and shoulders. So there's already 5 million confirmations you could have had for potentially entering this under just this specific support line, especially if you're watching it on a lower time frame, because even though we're on a 15-minute time frame still, I showed you how many confirmations you might have had on this. And if you then waited for this low to take you out, potentially even at this point, you might have already completely shifted yourself to a bearish bias. Or if you were happy with this as a grab and you understood it as a liquidity grab, which in essence is understanding smart money, right? Because there's retail players in this market and even retail mentors that trade retail and do well doing it because they understand how others are getting liquidated. So there's some mentors, retail mentors in this market that will show you an area such as this as an area of support, and they would get involved after this happened because, well, they might call it a false break, but what they actually understand is happening is liquidity is being grabbed. So there's already smart money in most of retail, just not taught in the way that you should be implementing it from a standpoint of last down moves for up moves, last moves that have not been mitigated, right? So when we go in and take a look at this, we notice that this is your last unmitigated zone, theoretically, right? This is your last unmitigated zone, last down before the up move, right there. Fantastic. Maybe you go and look at that on a little bit of a higher time frame if you want to, and you can go and see that there's a hidden demand zone here. And for anyone that doesn't know what a hidden demand zone is, it's basically a wick and a wick like so. We go over this in my mentorship. If you want to join, this is the only place. And also, if you're watching this and it hasn't been like 2 or 3 weeks since it came out, make sure you check out the previous video and do what I tell you to do in this video, because I'm giving away some spots in the mentorship for absolutely free. So just make sure you check this out if you haven't yet. Now, since this is what a more likely than not retail perspective would have somewhat been based off of, right? Now that we understand that this would be what mass retail would ultimately look at, let's take a look at it from smart money. So this is mass retail expecting bullish price action from the breaks and the retest of support and resistance areas. We get rid of that and we take a look at smart money. Notice there is still no difference between the perspective and the bias. The bias is still the same. Both retail and smart money in this specific case had expected a bullish nature in the market to occur. And lo and behold, that bullish nature did unfold. And based on the way that you manage that bullish nature of the market, you were able to profitably trade it both the retail way with breaks and retests, as well as the institutional way. But notice what the difference is. When you look at this market institutionally, you are not thinking about areas as resistance and support. Well, you kind of are, but you're understanding your areas of support as being areas of unmitigated zones that have been created by previous grabs and tests of other zones that have grabbed liquidity, continued higher to shift structure, to continue lower, to grab more liquidity, to shift structure, to tap into those previous areas, to shift structure, to come back to those last moves before the up moves, to then continue the upwards movement institutionally with all the orders that have been milked into the market by the strong hands, by taking out some other weak-handed players, by displacing them using fear tactics, using trend lines, using certain versions of a schematic or head and shoulders, right? That then got liquidated by the moves down that occurred right here. Now, when you look at this from a standpoint of smart money, the entire bias is still the same, but the way you are viewing the bias is completely changed. And what I mean by that is if we just take a look at this and understand what I have marked up here just for a second, what you'll notice is, again, there is this same kind of thing going on. We see an accumulation occur and prices break higher. As they break higher, they come down and begin to accumulate. There is a large, denoted by the green box, accumulation that occurs here. Weak hands, weak hands, weak hands being taken out, even weak hands right here, taken out and transferred into strong hands. Remember, strong hands are here, weak hands are here. Very simple. As well, these strong hands, as they come here, are coming here to do what? Mitigate the last down moves before the up moves, because inside of here are unmitigated positions that must be taken out before institutional new highs are continued to be met, which is met later. Now, as that happens, and that happens here, we again have that institutional shift. So this is an idea of institutional shift. So is this right here, right? Both of these are the exact same setup. If you notice that, if you actually follow your eyes along with the accumulations and the Wyckoff that is happening in these zones, right? And we're still bullish, just like the retail was. Now, as this big up move happens, we notice that we leave behind inefficiency between this wick and this wick, inefficiency between this wick and this wick, inefficiency between this wick between this wick and this wick, and as a result, expect it to more likely than not, and of course, remember, we say more likely than not because it's never probable. It's never 100% probable. So more likely than not, come to fulfill these areas of inefficient price action, to fill it and then continue to a given direction, just to also give a test of a spring that occurred. Now, what's interesting is as we had this entire green area of accumulation occur in this area, we also had this fractal accumulation occur in that area with the new selling climax AR. So this actually should be black, sorry, because that's part of this black one, just so you guys can kind of visualize that. So should this ST, this is actually an ST and STB for the higher, here we go, for the higher schematic. So we have this green schematic that undergoes and plays out, this black schematic that plays out. So we understand this area has a ton of orders that most likely need to get mitigated. We take a look at that last down move before the out move with the inefficiency. So you could include the whole thing, right? But we're just looking at the last down move before the out move, incorporating the wick. And people in the mentorship know a lot more about how we exactly draw in these zones perfectly. But if you studied and watched all the YouTube content, you should know as well. Now, we have a distribution up here, which is fractal, but also that puts in a ton of liquidity for the future by also testing the areas here. So as a smart money trader, you're actually, this same setup right here with the institutional shift occurred right here and gave you a perfect entry, again, under the same parameter. So this setup here is the same as this setup here on the other counter trend movement, right? And if you understand that, you're able to be part of both sides of the movement. So not only are you not just looking for the buys off here to go higher, you're also looking for all the stuff in here to go short term to meet the longs. And not only are you taking the longs just from an area like this where you're just figuring and hoping that because history repeats itself, it's going to hold at this level, you are taking info and interest of the zones here that are unmitigated, understanding this is nothing more than mitigation of those zones and creation of liquidity. So when you look at it from a standpoint of smart money, now you see this as the transfer of new weak hands into strong hands, right? In their little shark fin patterns, whatever, from retail standpoints. But now from smart money standpoints, you understand that this needs to be tested. And as a result, you either take the 50%, which is actually this blue line that you see me drawn out. I can show you really quickly. There's that 50%. Let's just use the open to be fair about it. So let's just use the open, because even I don't even take the 50% all the time, because I like to make sure. Also, from the smart money perspective, you understand this is a protected low due to the fact that we've mitigated a previous protected low. And we're still in a very, very bullish scenario, just having a large and long pullback into the zone before we break new structure, right? And now instead of looking at this as a resistance, we look at this as, yeah, it is resistance, but it's actually liquidity that we know needs to get cleared. And now, as price comes down to test this area with all this pre-built up liquidity, we are happy to be buyers, literally in the same bias at the same zones, and our 0.93 RR on behalf of smart money, on behalf of retail. So if we close this, on behalf of retail, again, that same area, the 0.93 RR at this resistance is now, on the other hand, a 1 to 7.05 RR, just to that same zone. Now, if we had that run, just like we spoke about in the mass retail logic, right? Where it goes to the very, very high because we're amazing Forex traders, right? Where it went 1 to 10, right? That exact same move, that was 1 to 10 for, whoops, can I find it? That was 1 to 10 for the, here we go, just to the very high. Again, we'll go a little bit under just to be fair. If we go back to the smart money side, that exact same high being met under the exact same bias was met at 1 to 50. And then I asked the question, would you rather be entering more trades that have a chance to run like this, or more trades that will also potentially hit around the same strike rate around the areas of this resistance, like that, right? Both are fully valid and both are great. Both can make you profitable. But the question is, are you a trader that wants to understand the actual movements behind price and what is happening, and take the extra step to not just trade areas that look like they might hold, but also areas that have a reasoning behind their mitigation and their inefficiencies? Well, then you're in the right place. Thank you for watching. And hopefully this kind of shined a little light on the difference between retail, mass retail, so actually the difference between mass retail logic and the retail smart money side of things, okay? The only difference is that sometimes your bias is going to result in a much, much higher return. Now, that's not always going to be the case, especially if you're someone that likes to partial a lot like me. I partial so much that, most of my trades run 1 to 2, 1 to 3, and I'm happy with that. But I also know that when I was a retail trader, partials of around 1 to 0.5 or even 1 to 1 was godsend. And honestly, a lock-in of 1 to 1 was amazing even with retail. So I'm just shining a little light on what I believe the market currently shows, or how it works in regards to retail and smart money. I have this post on Instagram. Again, this is an after the fact post, but there were many in the mentorship that got involved in this buy. I don't think I even took this buy. I made a video just now about the trades that I had been taking the entire week. Where were those? They were somewhere in there. Doesn't really matter. We'll get rid of that for now. But this is for the explanation of a concept, and we do this every week, and we do it new, and we have outlooks before every single week, the exact same way in the mentorship. So, right now this is indeed hindsight, but it is no different from how the market moves on a day-to-day basis. And if you need more proof of that, make sure you check out the previous videos available on my channel for all that stuff, with other markets and stuff like that. Should help you guys out a lot. And make sure you go to this most recent video, this one that's coming out, the top-down analysis 1 week of trading one, and make sure you watch it for the free mentorship giveaway. Now, that said, understand that the bias created by the mass retail side and by the smart money side was the exact same bias. The difference was understanding how and when you can get in, and how you can also manage that position to potentially better RRs, well, significantly better RRs. And as a result, potentially not be stopped out by something as trivial as maybe even this resistance, right? Or something of that nature. So hopefully this made some sense. Hopefully this shined a little light on the retail versus smart money side of things. And I hope to see you guys in the future in my other videos. And thank you so much for watching. And I'll see you guys in the next one. Bye.